Okay, let's move on. Last month, Happiest Minds announced the acquisition of Madurai-based IT services firm, Sri Mookambika Infosolutions. The deal comprised upfront and deferred equity payments totaling 111 crore rupees. To discuss more details of this acquisition in terms of what things will look like, and of course, what's the business momentum like at this point in time, Mr. Venkatraman Narayanan, Managing Director and Chief Financial Officer at Happiest Minds, is now joining us. Thank you very much, Mr. Venkatraman. Appreciate you joining in. Prashant this side. First up, if you can tell us the rationale behind the acquisition, specifically with regards to the price paid. You're paying 111 odd crores for a company which has 9 crores in revenues. Let's start there, sir. Go on.
Okay. Good morning, Prashant. Just a small correction. The company closed at about $9.5 million. So compared to that, the payout of about 111 is about 1.35 to 1.4 times revenues. And it's a profitable enterprise, has been around for 10 plus years, close to 14 years, if I'm right. And they focused on providing healthcare IT services to the healthcare industry. So they focus on a couple of very good accounts. And these have been accounts where we have tried to gain entry in the past. And we saw the kind of traction that those customers had with SMI. And that's how we got to know about this company rather. And since then, we have been tracking the performance of this company. And when the opportunity came to acquire them and make them part of the Happiest Mind story, that was what we did at the first go. It nicely fits into the acquisition strategy that we had laid out for ourselves. Maybe in terms of size, we would have liked to do a bigger one because the effort that goes into acquiring a $10 million or a $20 million company is relatively the same. So it's always ideal to do an acquisition which is larger than the $10 million size. But nevertheless, it gets us stronger into the healthcare vertical. It fits in very nicely into the product engineering business segment of ours. And they have shown good growth over the last couple of years. And we are evaluating the budgets and the plans for the next year. And we have seen that they are showing a similar kind of growth pattern for the next year. Profitable, good growth, and so fits in well.
Mr. Venkatraman, my apologies completely. $9 million. So you're paying less than 1 times sales, right?
No, $9 million would be about
you're paying
80 crores. 80.
Right.
111, right? 111.
Yeah. So 1.3 times.
Yeah. Okay. So in terms of margins, etc., where are things at for this company, and post integration, what will the combined entity look like? Yeah.
We don't see any margin dilution. They are also at the 25-26% kind of a number. During due diligence and during our discussions, that's what came out. And there are benefits of a merger with a larger company like ours. So integration benefits do happen, and we are likely to retain that kind of a margin outlook for that business.
The reason I guess we're asking you on overall margins as well is because now the supply side pressures seem to be easing. Attrition is down. Companies no longer need to hire at any cost. So this margin band, right, this 22 to 24% band that you had put out earlier, is there any scope to outperform?
We have been outperforming for 11 quarters. So I think... And the levers that we've had are foreign currency, the offshore, the huge offshore benefit that we are 95% of our people are based out of India. But as I've been mentioning in the past, many of these things could change and in line with some changes that happen in the economy, and which is why we are holding to 22 to 24, while continuing to make investments in technology, competence, and our overall approach to building capabilities in the domains that we have chosen to be in.
No, the reason I asked you is because as per the 9 months of this year, you're already at about 26.5%. So I guess you'll be beating that 22 to 24 band by the end of this year is what I was assuming. In the longer term, medium to longer term, what could the average be?
We have been holding on to this 22 to 24 in the medium to longer term. kind of thing. For this year, yes, we had made a margin guidance of 25% plus in constant currency. As far revenue goes, we'll meet and beat that. As far as margins are concerned, yes, we'll meet and we'll beat the guidance for the current year. The task in front of us is now to start looking at our plans for the next year and go on that basis.
All right. Hi, Mr. Venkatraman. You have cash in your books, I think, of around 700 crores, and you've taken an enabling resolution to raise some money via QIP as well. So my question to you is, will you all be going ahead with any kind of fundraise? Point number one. And point number two, you'll clearly have more appetite for M&A activity. Should we look to some more in the next 6-8 months or?
We're consistently on the lookout for good companies to partner with and become part of the Happiest Minds family. So that's something that we continue to focus on. As far as cash on the books, you're right, we've got about 700 crores. We did take an enabling resolution, but the QIP market has been kind of, it's not been playing out in favor of the investee companies over the last few months, or let's say a couple of quarters. Especially the IT industry, with especially all the talk about the US recession and everything, things have been kind of on a wait and watch mode, because QIP has certain pricing and pricing restrictions, and people have to go by that. But that said, right now we are in the process of discussion with our bankers and investors. In the right time, the board will take up an offer as and when it comes up. But in the meanwhile, we are going ahead with raising of debt, because we are relatively debt free right now. So we are raising debt and building that, I wouldn't say a cash chest, but the resources that are required as we progressively look at companies to acquire.
Okay, just one question, because it's the hot topic of the moment. We saw Wipro reducing or slash.
As we progressively look at companies to acquire.
Okay, just one question, because it's the hot topic of the moment. We saw Wipro reducing or slashing their employee pay for the freshers that they're hiring. I mean, are you looking to bring down employee costs as well, or is it just a one company phenomenon?
We have a current batch of 300 freshers or campus joinees who are undergoing training. So no changes there. We have made offer to about 400 and we are holding on to that. No changes there as well.
All right. Thanks very much. And apologies again for that, fop or
No, that's fine.
Thank you. Thank you very much.
That's fine.
For
Thank you very much.
Graciously answering those questions. Thanks indeed.